Many crypto investors only focus on absolute performance without considering the relative performance. Making 40% on altcoin sounds impressive until you realize that Bitcoin has gained 110% in the same period. And this is the trap that most crypto investors fall into. They celebrate absolute returns while actually underperforming the overall market. What gets measured gets managed. This timeless principle also holds true when tracking your performance of your investment portfolio, whether this is in stocks or cryptocurrencies. The cryptocurrency market is like a roller coaster. Its high volatility means that you need solid reference points to determine whether your investments are performing well over time. And here's the key thing. It's not how much money you have made or lost. It's about how well your investments perform over time compared to relevant sectors or specific assets. And let's be honest, if you're investing in altcoins, you probably want to catch projects that outperforms Bitcoin and Ethereum in the long term. If your altcoin investments fail to outperform Bitcoin and Ethereum in the long term, it's better to just simply hold Bitcoin and Ethereum instead. You want to maximize every dollar or euro invested. After all, the goal is to get the best possible returns within your risk comfort zone. No one wants to leave money on the table. Well, you're in luck, because I just created an application for the purposes of this video. Let me introduce you to my custom-built crypto performance dashboard. This application solves the benchmarking problem by letting you track performance of cryptocurrencies in different crypto sectors, such as layer 1s, DeFi tokens and meme coins, benchmark against market leaders Bitcoin and Ethereum, track sector-specific median performance to spot over and underperformers, and analyze multiple timeframes, from 7-day trends to annual performance. So let's look at a real example here. Here's a performance breakdown of major layer 1 cryptocurrencies from January 2, 2024 to January 2, 2025. The percentage shows exactly how much these assets have grown or shrunk in the last year. And you can hover over these assets to see their performance and their market cap over the last year. And looking at the numbers, the layer 1 sector has seen median returns of around 52%. The standard performers, now you can see Sui, Ton and Tron leading the pack this year, but you can also see that Atom, Polkadot, Aptos and Avalanche massively underperformed relative to their peers. And here's a mind-blowing stat. There's a massive gap between the best and the worst performer in this sector. That's the kind of spread that shows why picking winners in crypto can make such a huge difference in your returns. But here is where it really gets interesting. When we compare these layer 1 protocols to Bitcoin, the picture changes dramatically. The median performance of the selected layer 1 protocols compared to Bitcoin is around minus 43%. And many of these protocols actually delivered lower returns than Bitcoin, which really makes you think about risk versus reward. And let's talk about Ethereum here, the second largest crypto by market cap. 2024 hasn't been its strongest year. While Bitcoin was breaking records and hitting all-time highs, Ethereum has lost ground against BTC. To put this in perspective, the Ethereum to Bitcoin ratio dropped significantly in the last year. And while Bitcoin was making headlines with new peaks, Ethereum is still sitting well below its previous high of $4,900. Let's switch gears and check out how the DeFi sector is performing. The DeFi sector also shows some impressive gains, with Pendle and Radium stealing the spotlight among their peers. But here's the reality check. Just like the layer 1s, many DeFi protocols haven't kept pace with Bitcoin's performance. And this highlights why it's crucial to benchmark your investment against crypto's market leader. Let's move to the meme coin sector. So the meme coin sector has been particularly volatile, with 30% market cap decline in December alone. However, coins like Pepe still managed to deliver over 1600% returns in the last year, showing the potential for outsized gains in this speculative segment. And even after adding Bitcoin or Ethereum as the benchmark, Pepe still massively outperformed these two assets. Now that we have analyzed the crypto performance across different sectors, let's tackle the million-dollar question. Where might the smart money flow in 2025? While no one can predict the future with certainty, of course, we can look at some high probability scenarios that can unfold in 2025. Keep in mind that these scenarios can overlap and can occur in sequence rather than in isolation. First, we could see continued Bitcoin dominance. Major institutions like Van Eck and Standard Chartered are projecting Bitcoin price to be between 180k and 250k, driven by institutional adoption and ETF inflows. In this scenario, you want to maintain significant Bitcoin exposure. Then there's the sector rotation scenario. The crypto market has shown us time and time again that when Bitcoin consolidates, that the money will flow from Bitcoin to more alternative cryptocurrencies. And this altcoin season typically sees smaller cap tokens significantly outperforming Bitcoin. We could see altcoins like Ethereum and Solana capturing substantial value, while the stablecoin ecosystem creates new opportunities across the board. In this scenario, altcoin exposure will deliver superior returns compared to when you only hold Bitcoin. However, we must also consider the more bearish scenario. If a recession occurs in 2025, we could see a dramatic shift in the market sentiment. During economic uncertainty, investors typically retreat from high-risk assets, and cryptocurrencies could face significant selling pressure. Historical patterns show that Bitcoin has lost up to 75% of its value just on recession fears alone. Altcoins typically face even more brutal selling pressure than Bitcoin. Many altcoins can lose up to 95% of its value, as we saw with Solana's drop from $260 to $12 in the previous cycle. Even established projects aren't immune for dramatic drawdowns. And the smaller the market cap, the more severe these corrections tend to be. Many tokens could even be worthless in such a scenario. Remember, success in crypto requires adaptability. Your strategy should be fluid enough to capitalize on whichever scenario dominates the market. Success in cryptocurrency isn't just about making gains. It's about how your investment portfolio performs against benchmarks like Bitcoin and Ethereum, and measuring your returns against the sectors that you're invested in. This data-driven approach helps you to spot opportunities and adjust your strategy when needed. As we look towards 2025, many analysts predict that Bitcoin will reach unprecedented levels, potentially triggering explosive altcoin rallies after the consolidation of Bitcoin. While these scenarios are exciting, remember to be flexible with your strategy and keep your risk management in place. The market can turn bearish when least expected. I'm excited to enhance the application demonstrated in these videos by expanding its capability. Future updates will include additional sectors and risk-adjusted return metrics. I'd love to hear your suggestions on which features will be valuable in your investment journey. Drop them in the comments below. See you in the next video. Bye.